You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Hi, welcome to Talking Real Money. I'm Tom Cock. The last few months and weeks have been a difficult and stressful time, depending again on what you wanted to see the outcome of the election be. I think universally people were pretty upset about what happened in the U.S. Capitol on January 6th. COVID deaths continued to go up. And so I was surprised, but not outrageously surprised, by a call I got from a friend that goes back about 30 years. Now, this is a guy I haven't talked to in over 20 years. And it turns out he listens to our show locally in Seattle. I didn't know that. But he just called me up out of the blue and he said, I've been a do-it-yourself investor. I've really invested in the bluest of blue chips in the United States. That's a term not used a lot anymore, but these are huge companies, excellent reputations, long track records, et cetera. Really, if you will, the safest of stock picks. But he said, now after what's happened in the recent weeks and months, in his mind, America's changing and the world's perception of America is changing. So his question was, should I invest differently? Should I ignore U.S. stocks, for example? And as a way of looking at this, consider the fact that most investors over-invest their money in their home country. We have a home bias. In Germany, it's somewhere around 90% of the investable assets are invested in Germany. Japan, I think the number's even higher. By the way, think that through. There's a country, by the way, that has had negative returns, at least the Nikkei, since 1990. Long time to see a stock market underwater. But what should you do if you believe America's changed, if you believe the future is different, if you believe the perception of America is somehow changed around the world, which it very well may be? Well, I got this from my brother, who's an attorney, smart guy, and I was talking to him about it. He said, in times of tumult, go back to the basics. I love that. In times of tumult, go back to the basics. So let's do that. And part of that, we'll talk about how to invest your money globally. The basics are, and again, if you're just starting out as an investor, if you're 50 years old, if you're 25 years old, whatever, the basics are, number one, and this is the part that people often don't talk about, but you're not going to be a very good investor if you don't save something to invest. That's right. You got to take 10 to 15% of your income. You need to put it away. Oftentimes, the easiest place is in a company retirement plan, but it's still, I think, more than 50% of small businesses that don't have one. Then you need to go set up a Roth IRA or an IRA, but you got to set something aside. We've talked about this on the program many, many times, but somehow people always want to jump to part two, and that is investing. Let's talk about investing properly. The first thing to know is, what is your stock to bond ratio? Because again, people have a tendency to jump to step 85. What kind of stock should I own? When should I get in the market? The first thing you need to know is how much money you're trying to make on your money and how much volatility you're willing to accept, the stock to bond ratio. Then number three, diversification. Now, we invest our clients' money, half in the U.S., half outside the U.S. Why in the world would we do that? The U.S. has had much better returns over the last 10 years, not over the last 50, by the way, but recently it's been all about U.S. stocks, better than international, certainly, better than emerging markets, which had been the hot place in the early 2000s. Why 50-50? Well, when you look at the globe in terms of the value of companies, it's about half in the U.S., a little more than half, maybe 55%, 45% outside. So we simply say, let's array our money where the value of those firms are. Number two, over a long period of time, being globally diversified has meant less volatility and better returns. Not all the time, not every year, not even every decade, but over the long haul, this has been the better way to invest. And that brings me back to the question from Steve. Steve, I told him this on the phone. I think you should be globally invested today, tomorrow, and into the future. We don't know which market will be best over the long period of time. His thought was China, by the way. And if you're in emerging markets, you're invested in China. Not a huge amount, but a small amount, still some exposure to those local economies. Global diversification. And number 4, by the way, the basics are use low-cost index or index-style mutual funds. People have a tendency to forget. They get excited about a particular idea. They run out and buy a mutual fund or ETF that is expensive. It's actively managed. Some even pay commissions. You don't have to do any of that. Save, invest properly, diversify, keep your costs low. Hey, in times of tumult, go back to the basics. Pretty much straight up. And by the way, speaking of the basics, you want to learn how to invest for retirement? You want to learn how to create income in retirement? Do you want to hear from some of the savviest people in this industry, the ones we think you should pay attention to? Then join us Saturday, February 20th for Retire Meet America. It's absolutely free. Starts at 8 in the morning Pacific time. Well, later for those of you on the East Coast. It's all virtual, it's all free, and it's a terrific presentation. David Booth, co-founder of Dimensional Funds. Paul Merriman, fantastic author and writer and podcaster. Again, you can sign up. It's all free. You go to RetireMeet, MEET.com, RetireMeet.com. We'd love to see you on February 20th for what I think is going to be an absolutely terrific event. Thank you for joining us here on Talking Real Money.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.